Uh-oh. Hello, hello. I realized I forgot to change my thumbnail. Look a little silly right now, huh? There we go. Hello from Saudi Arabia. Let's see. Alright, now I got the proper thumbnail in here. How's it going, my Saudi viewer? Get started in a couple of minutes here, once a few people have a chance to join. I know it's a Sunday, so I'm not exactly expecting a ton of people to hang out. But for those that are joining, hey, this time is going to be for you guys. So this is a charity stream because a friend of mine from Kenya who actually taught me Swahili, and I stayed with him when I was on a study abroad there. His wife needs a C-section, and he's a Kenyan villager, so he's not exactly rolling in dough. I mean, I've contributed to it. Anybody else who is kind enough to contribute to it, there's the fundraiser pinned comment. If you want to, by all means, please, I would really appreciate if you contribute to his fundraiser. If not, then just by being here, you're helping, because any money that I make off of this live stream is going to go straight toward the cause anyway. So even if you choose not to contribute, that's totally fine. There's no pressure. It's YouTube. You can do whatever you want here. But if you do contribute, then by all means, I will stop what I'm doing to take care of any questions that you guys have. I do have a little bit of content prepared. We're going to look at the Strangle Strategy, which I've been using pretty exhaustively lately, and it's been going fantastic. I know a lot of people don't use short strangles and short straddles because they're afraid of the unlimited risk. I was afraid of that for a long time too, but I started using it, and it's just been rolling money. I'm like 10 for 10 on getting it right, and there's just a few simple things that you have to do in order to have success with it. And as long as you're familiar with selling options already, it's really no big deal to start moving over into those quote-unquote unlimited risk strategies. So we can demonstrate that. We can do a portfolio reveal. We can look at my outlook on the market. I think now that we've had some pullback, now it might be time to go long. I can show you guys my reasoning. But this is really going to be for whatever you guys want to talk about. It's a Q&A. It's an AMA. So if you want to just roll with what I have prepared already, we could do that. Or if anybody has specific questions or things they want to talk about, we can do that. All I'm going to ask is that you at least look at the fundraiser for Valentine Mina, whose wife needs a C-section. If you choose not to contribute, that's no problem. I'm not expecting anybody to. And like I said, just by being here, you're helping, because any money that I make off of this live stream from ads is going to go right back into their cause. So thank you guys for even tuning in. We'll give it another minute here. We'll give it another minute here for a few more people to join. I know it's a Sunday, so there's not going to be a whole mess of people coming in here. But we'll give it a couple minutes and then we'll go ahead and get started. Hello, Ross. A couple questions already. Hello from Peru. Hello from Iceland. I didn't realize I had so many non-American viewers here. Duke Sandwich says hello from Iceland. Mickey Bag says, what's your opinion on the possible bankruptcy of the Chinese property company Evergrande? I've been reading about that, and I'm not sure what to make of it. Honestly, I'd like to see a couple of property companies go bankrupt so that we can end our housing crisis in the U.S. I don't know. I don't know what's going to go on with the Chinese company. I'd like to see it go bankrupt. And Dixie Norma says, Mike, bro, why the fuck won't Merrill approve me for a margin account? Bunch of boomers. I don't know, man. I've never had any problem getting a margin account on Merrill Edge. What are they telling you? You don't have enough money? If you don't go to Tastyworks, you can't get on there from Tastyworks. Jason Lyons, I am also from New Jersey. I grew up in Monmouth County. All right, 36 viewers. That'll have to be enough. We'll go ahead and get started here. Hey, do you guys have anything you want to look at first, or do you want to check out Strangles? I mean, it is an AMA, so priority is going to be toward making sure that you guys are satisfied with whatever I bring up. But we could look at the Strangles. Let me see. Whoops. Let's get my face on camera there. Let's zoom in a little bit. I'm still getting used to how OBS likes to prioritize like all wrong stuff when you're clicking on the screen. And zoom in a little bit so you guys can see what's going on here. There we go. Give you guys a better view. All right, delivered by Jay says, Mikey, do you prefer the PMCC or the wheel strategy? I think I like both of those, honestly. I like both. But if I had to pick one of them, I'd probably stick with the wheel just because it's the easiest one to use and you really can't go wrong with it. The PMCC, there's a little bit more risk to it, but I like both. I mean, that would be like putting two kings against each other and asking which one I like best. But let's do this. Let's check out the Strangle Strategy, which I've been using pretty extensively lately. I used to not do this because if you're familiar with the Strangle, you know that what you're doing is you're selling a long call, or you're selling a call and you're selling a put at the same time. And actually, now Robinhood will give us a pretty good example of what that looks like on our profit and loss. But let's say October 15th, you were to sell the call, and I'm just going to pick random ones right now just for the demonstration, and we'll sell the put. All right, so we've all seen these short strangle strategies before. We know what it looks like. You sell an out-of-the-money call and an out-of-the-money put at the same time, and as long as the stock stays in between those strikes, you stand to receive your max profit. You will have sold the call, which expires worthless, and you collect all the money. You sold the put, expires worthless, you collect all the money, and your max payout is here. But if you look at these wings, where you have chances of losing a tremendous amount of money, that's what scares everybody. You're like, I can't do it because I can't take on the risk that if SPY goes to 380, that I lose $2,400. That's too much risk, so I'm not going to mess with this strategy. And that's the way I looked at things for so long. I was like, there's no way I'm going to take on that kind of risk. But there's a handful of ways to manage this, that even if SPY does start blowing your wings out and it drops to, I don't think there's a remote possibility that it's dropping to 395 or 390 by mid-October. But that is what everybody is afraid of. But let's take a look. This is how I've been managing these, and how I'll show you how easy it is to maintain control even when your wings start getting blown out. So what I do is I go 45 days to expiration. And so right now it's the 19th, and I want to make sure that there's a lot of premium and a lot of time on my positions. So I'll go about 45 days out, would pretty much be the end of October. So these are off months, or off weeks. Usually you look for the monthly expirations. So the third week of October is really what you would aim for. Or October 15th would have the highest amount of volume. But if we're talking about SPY, you're selling Strangles on an indexed ETF like this, the volume, the open interest, looks like the open interest on this is going to be plenty. All right, 673 volume on Friday, 449 is the open interest. If you want to trade a Strangle on October 29th, you're going to be fine. If you want to trade 400 Strangles, you might not be in good shape. But I'm going to go 45 days out, regardless of where that lands me in the month, whether it's the second Wednesday or whether it's the third Friday like we prefer. But here's what I'm going to do. I want to make sure I'm going 45 days out so that I have a substantial amount of premium. And I'm going to look at the deltas and sell the put at the $30 or the 30 strike at the 30 delta. So here we're 32. Let's see. All right, the 30 delta. I'm going to sell the put at a 30 delta. That's the 427. And then I'm going to sell a call at the 30 delta. Let's see where that lands me. 447, 450. All right, so about 452. So I'm going to sell a Strangle, a short Strangle that looks like this. 45 days to expiration on October 29th. If the price of SPY is between 427 and 452, those are my strikes, then I will receive the max profit, which is $970 per contract. In real life, I would do several of these. I might do 3 or 4. All right, since I'm collecting $970, that means that I have an additional $9.70 in either direction, and I would still break even. So as long as the stock price ends between 417.30 and 461.70, then I would break even. And of course, I have unlimited loss in both directions. So if SPY goes down to $0, I would stand to risk being forced to buy SPY at $427, and it's worth $0. All right, that's the nightmare scenario everybody thinks of. What if I get completely blown out? All right, well, one, SPY is not going down to $0 by the end of October. Realistically, I think it's very unlikely that SPY is even going to go down to 427 by the end of October. I think it's more likely that SPY goes up to 452. All right, but what if we start getting to that point where SPY is ticking up, we're starting to really mess with our break-evens? What if SPY goes up to 452? Do we have any moves that we can make in order to get ourselves some additional premium? Obviously, we can't simulate that right here on Robinhood, but let's just play it out. Let's say SPY has gone up is now ticking up at 452. What can we do? What we would do is, since our put is now very deep out of the money, we can buy it back. Well, maybe switch over to puts here. We're going to buy back our put. Now, right, we sold it for 607. If SPY starts ticking up to 452 by, let's say, October 1st, we're going to have made quite a bit of money on this 607. Remember, the puts are always going to be a little bit more expensive than the calls because stocks drop faster than they rise. So I would say, let's just estimate, this thing's going to be worth maybe $200. All right, actually, we can estimate that. So if SPY goes up 16 bucks, let's go $16 further in the money, further out of the money. So let's go 16. Let's see what the 411 is trading for. All right, so I was a little off, 365. Okay. So let's say we made about $300 on this. All right, we're going to buy back. We're going to buy back this one for take our $300 gain, and then we're going to roll it up to the new 30 delta, which might be, I'm just going to estimate here. I don't know. I'm just going to estimate what the 30 delta would be if SPY starts ticking up to 452. Let's say it's now here. All right, we're going to sell for an additional $600 premium. Now what we've done is we have sold the initial put for 600 bucks, bought it back for 300, so we made $300, and then we rolled it up to a new strike. The same expiration, but a new strike, and grabbed ourselves an additional $300 premium. So not only did we take our gain, but we're also going to now move our break even. We're going to move our break even another $3 higher. So our break even to the top is no longer going to be, what did I say, 470, something like that. I think it was this. It's no longer going to be this 462. Now it's going to be 465. We just bought ourselves an additional $3. And now what if the stock keeps going higher still? What if now it's starting to test our new break even? The stock has just shot up and is showing no interest in coming back down. Well, our next move is to roll up once again. We're going to buy back this new one, probably for another $300 gain at least. So now we've made $600 on the Strangle. And the stock is now testing our north break even. So what we're going to do is we're going to see right where we sold our call. Why am I getting a weird... We're going to roll up right to where we sold our call, and we're going to sell our put there too. Now we can't simulate the stock actually moving, so you're not going to get $1,400 for doing that. But you will now have this strangle where it's going to push our break evens out even farther. The perfect scenario, once we've rolled up into a straddle now, is that the stock ends perfectly at our strikes. Now we've got both the short call and the short put at 452. If the stock ends right there, we're going to seize our max premium. That's going to be about $1,700. Remember, we already made $600 by rolling up our short puts already. And if the stock really does still go higher, and now it's 460, well, congratulations, SPY is up at 460, so your stocks must be absolutely killing it. But if that does happen, all right, we don't want to get blown out to the top side because SPY keeps going. So all we'd have to do from there is roll out to another day. Simple as that. I know that's a lot to go over, but we're going to go just roll a month or two and sell new strikes and probably make an absolute killing by doing that, or at least sees quite a bit of money. I know that was a lot to go over there. So this is very similar to the Iron Condor, but without the longs on either end. So we are taking on undefined risk if the stock keeps going in one direction and never comes back to the starting point. Then yeah, it would be a big, big loss for us. I don't think it's very likely that SPY is going to go to $480 by end of October. It's not going to go down to $390 by the end of October. That would be absolutely devastating to the market in really either direction, because people aren't going to be prepared for that. Stonked Up, thank you so much for the $10 contribution. Really appreciate that. You are now VIP if you have a question you want to ask. You want to go over anything. This is your Q&A. Stonked Up gets priority here. So Pudsmoker says he loves gambling with an edge. So I like to think of it that way too. I don't go to the craps table and start rolling dice. I don't go to the roulette table and put money down. I always like having some control over my gambling. So by using short strangles, you give yourself 3 different opportunities to protect yourself in case your trade doesn't go according to plan. You want the stock to stay in between your strikes. All right, I'm just going to set something up so we can see it. That's a little bit tight. I just made an inverted one. I was trying to make a point. I completely screwed it up. Let me try that again. All right, just to set it up, you want the stock to stay in between your strikes. But people tend to think, oh, once my break-evens get blown out, that's it. If the stock keeps going up, I'm screwed. That's not quite the case. You've got opportunities to roll. So if the stock goes way up, all of a sudden your short put is now worth nothing. You could just buy it back on the cheap and sell a new one closer to the price of your original call. It's going to tighten up your strangle a little bit more. But remember, you just seized money. You took money. So you have a gain already. And if you're worried about it continuing to the upside, you could buy a share and give yourself some additional edge. If the stock still keeps going higher, we've got our second line of defense, where we roll up again and into a strangle, or a straddle rather. We would roll into the straddle, where now we have something that looks like this. Looks like, not even like that. Where are we at? Anyway, it looks like this, where you have just this one sharp point in the center, because your short call and your short put are the same strike. So all that money is now riding on it being expired precisely at 447. But if that still doesn't work, if the stock still keeps going higher and you're still losing money, third line of defense, we're going to roll out in time, buy back your short call for a loss, and sell a new one that expires further out in time. And that is going to save you yet additional money. You have 3 lines of defense when you use the strangles. And I'll show you what I've been doing here. Hold on one second. Can you technically roll? Adam Gunzer says, can you technically roll forever? Yes, pretty much. But at some point, you're going to have a lot of buying power tied up in a pretty much impossible situation. So, Stonked Up with the second super chat. Thank you for your contribution to this stream. About to be watching football all day, so just wanted to say, buy tech calls. Go Niners. Great that he brought that up. So let's check this out. Before I show you the strangle that I have open right now, and I've been running for this is my 10th time doing it, and I've been successful every single time, even though the market's been up and down. I want to show you guys exactly how I run it. But he brings up a good point. He says, buy tech calls. So let's see what's going on here. Let's look. I want to show you guys SPY. So we know that SPY is the S&P 500. It's a little bit more diversified than just tech, but a lot of it is technology. I think the highest 4 are all tech companies in SPY. What is it? Like Apple is first, Google or Alphabet, Microsoft, Tesla, Facebook. I think those are like some of the top 5 on SPY. So it is pretty heavy on tech, and then we'll look at QQQ after this. And then right before we do this, so Andres P, he says, anybody using the strangle on AMC? I have done a strangle on AMC before. It's extremely high risk because that is a stock that can go up or down $30 in one day like it's nothing. And we don't want that. Even though we've got defense moves that we can do to try to salvage the position, we don't really want the stock going up or down that much. So I recommend staying to the indexed ETFs like SPY. I've done this on Triple Q. Triple Q is another one that you can do it on. I've done it on Brazil, which is EWZ. I've done it on EWZ. Even though the stock is all over the place, Strangles are still very successful in this regard. Or heavy on it. So, all right, Stonk Dump brings up TQQQ. I've also been doing that one. We'll get to that in a minute. But let's check out SPY first. Every single time that this stock has touched the 50-day DMA, it has bounced. Every single time. So I don't see any reason specifically why this would be different. Is there anything going on in the market now that's really going to drag stocks down? I mean, are there any more states that are going into coronavirus lockdown? Or are unemployment numbers getting worse? The only thing that I can see coming is the taper tantrum. The Fed is no longer going to be printing as much money. Or maybe they're not going to buy as many bonds and as many corporate bonds. But they're only buying like AAA rated bonds anyway. I don't think we really need the Fed to continue doing that. And if they do get to that point, maybe sometime in mid-2022, then I could see us start pulling back further. But right now, I don't see us going below this 50 DMA. I think we're just going to bounce right off on Monday like we've been doing. And even though the MACD looks like absolute crap right now, how much worse can it really get? Maybe we go down into the 430s at like the worst case scenario. I don't think we're going to get anywhere near this 200 DMA. So I'm confident that we are going to bounce off of this. Triple Q is a little bit harder to pin down because it doesn't hit the 50 DMA quite as often. However, every time it has, it's either gone just a little bit below or it's bounced. And it does not look good on the MACD. The RSI does not look good either. But these 50 DMA lines have been very strong for both SPY and Triple Q. So I am starting to build my bullish position now after this pullback. I've been sitting on a little bit of dry powder. And I am happy to see us hit this 50 DMA because that's my buy target. So once we get here at about this 369 level, that's when I'm going to start going deeper into TQQQ. So far, I picked up 25 shares of it. TQQQ. I'm going to buy some more. We've got a little bit of space left before we hit that 50 DMA, but I think we'll be nailing the bottom right there. And yeah, MACD does work for, that is my favorite indicator, and right now the MACD looks like absolute crap. But for this position specifically, I'm thinking we hit the 50 DMA, we bounce. There's not a whole lot more to it. I mean, look, we've dipped below the 50 on the RSI. We've had really crappy MACDs before. Look at TQQQ right here. Drop below the 50 on the RSI, usually very bearish, but here it goes bouncing. MACD looks like crap, here it goes bouncing. Sometimes that just happens. But I think we're in a good position now to start buying more. So I've got a little bit of dry powder left. I've committed a lot of it. I committed 8,500 to LIT. So LIT, this is the lithium ETF. Same deal, hits the 50 DMA, bounces. MACD looks like crap, RSI looks like crap. That's okay. I think lithium is going to do very well. So I bought 100 shares of LIT via the use of a short put. But let's do a couple questions here. John Span says, would starting out with spreads or strangles be the easiest option strategy for a college student with not much knowledge yet on options? Thanks in advance. Love the content. Keep it up, bro. So my recommendation for you would be to start with the wheel strategy. If you have enough money, you're just selling puts until you get assigned and then selling covered calls. It is by far the easiest strategy. If you've got like $4,000, you can do that. But if as a college student, $4,000 was like probably the most money I ever had at one point when I was in college. So if that's too expensive for you, then start doing vertical spreads. So it would be like EWZ, the Brazil ETF. Let's say you kind of think this is a good spot. The stock is going to start bouncing because it's come off a little bit. We're going to sell a put. I hate how Robinhood does that. We're going to sell an at-the-money put and then buy an out-of-the-money put as some protection. So if EWZ stays above 32.16, you will have made money. So your max risk is 216, max gain is 84, but you've got pretty good odds using this method. So I would use the vertical spreads if you're absolutely impoverished. If you're not, then you can use the wheel strategy. And seriously, look up if there's any blood plasma in your area. Look up blood plasma donation because I think I made probably $4,000 or $5,000 in college just selling my blood plasma. If I didn't do that, I would not have had any money at graduation. That's really the only reason I had money was by selling my blood plasma, not your blood plasma. So look up BioLife, look up CSL Plasma, seriously, sell your body for money. Ba, ba, ba. Let's see. So there's a handful of questions. There's actually a lot of questions coming in right now. EC Muppets Delta threat. I'm not really sure what he's referring to. So Stonked Up just started his position in Lit as well. Yeah, I think this is a really good... I think Lit is actually a really good pick right now. It doesn't have this like massively high volume, but I mean, when you look at the chart, like, is there a lot of reason to be bearish on lithium? I mean, this is it's a good industry. It's a good security. The technicals in the near term don't look great, but you're not going to beat lithium when it comes to the electric vehicle rollout. Like the 5G rollout, the Internet of Things, all of these are going to need lithium. And I know they're working on sodium, they're working on hydrogen and unobtainium to try to get around needing lithium. I don't think any organization is anywhere near being able to replace lithium batteries with any other element. If that happens, I'll change my mind on lithium. But right now, I don't see any evidence of it. So I'm happy to start my position here. I'm just going to start selling covered calls on Lit, pretty far out of the money. Maybe 1 month at a time. All right, Mike says, is there any advantage to selling a put spread over buying a call spread? Is one more liquid than the other? Yes. Yes, there is. We're going to get to that. So, Mike, hold on to that question for 1 minute. Oh, and iDylan0 asked a great question. He said, when do I normally close my spreads? 50%. So we still got to come back to my triple Q spread, my triple Q strangle. All right, hold on. One thing I want to do first, I want to show you guys my plan for lithium. Now that I've bought 100 shares, I'm going to go out about a month at a time, and I'm going to sell out of the money covered calls enough to buy 1 share. So this month I'm going to sell the 90. It's the 22 Delta. I'm going to try to sell it for about $100, and then I will use that premium to buy an additional share. All right. iDylan says, when do I close out my positions normally? Actually, let's do Mike's question first. Is there any advantage to selling a put spread over buying a call spread? So, excellent question. I think this is really important because we think about what is a call debit spread versus a put credit spread. I mean, it's basically the same position, right? If you buy a call debit spread, you need the stock to go up to make money. If you sell a put credit spread, you just need the stock to not go down. So why on earth would anybody use the call debit spread over the put credit spread? All right, let's look at a couple things. So the advantage of a put credit spread, like I just said, I hate how Robinhood like rolls you all the way to the max stock. Okay, the put credit spread. So we are going to sell a put at the money, and we're going to buy one out of the money. I'm just picking strikes here. I'm not really doing any nuanced evaluation. All right, so as long as the stock stays above 440, so right where it is now is perfectly fine. It stays above 440, we're going to come out with profit. If it stays above 441, so right where it is now, we're going to make more money, right? Okay, remember what this chart looks like. Now let's flip a little bit and let's do the call credit spread. So or the call debit spread. So why would anybody buy this? All right, we're going to sell at the money. We're going to buy at the money and sell out of the money. Okay. So now let's look at the difference. We need the stock to go up above 442 before we even make any money. And we need it to go above 444 before we actually hit our max profit. All right, so what is the difference? Why would you choose to do this? All right, let's think about this. If you sell or if you buy a call debit spread and the stock goes up to 460, the probability of you getting assigned early to sell at 444 is pretty high. Now, if you sell at 444, or if you get assigned to sell at 444, and you execute your own long call to buy at 441 to satisfy it, you have now seized your max profit early, right? You're buying at 441, selling at 444. You have seized your max profit early. Well, what if we did it the other way? What if you get assigned early on a put? This is expiring like tomorrow, so this is not a very good position. But what if you get assigned early on a put credit spread that you sold? So we're selling here, we're buying here, stock tanks. All right, if you get assigned early and you are forced to buy at 441 and sell at 437, you get assigned early, you are at max loss. So getting assigned early on a put credit spread is max loss, whereas getting assigned early on a call debit spread is max gain. But in exchange for that, you won when you use the call debit spread. You need the stock to go up, not just stay where it is, but you need it to go up, usually, if it's out of the money. I mean, you can set up a call. This is going to be more confusing than anything else. But you can set up a call debit spread where you don't need it to... I just think I did that backwards. Oh, we're going to buy call there and sell it there. You can set up a call debit spread where you can be at max profit if the stock goes up or stays the same. But in exchange for this advantage of getting assigned early, being max profit, you also have to spend money up front. Versus if you sell a put credit spread, you receive money up front that you can either reinvest elsewhere, you can receive interest on it if you're leaving it in cash. I mean, there's some advantages to doing that too. So basically, it all comes down to how fast do you think the stock is going to move, and what do you think is going to happen to implied volatility? Because if implied volatility increases, you're going to lose money on your put credit spread. As simple as that. That's a lot to go over. All right, who's making plasma grenades? Lit files for Chapter 11. Lit is actually an ETF, so it's not going to file for Chapter 11. It's a whole bunch of different companies. Did the Brazil market crash? I'm not sure because the stock did. This is like the Brazil's S&P 500. Over the past 3 months, it's performed like shit. It's down like 20%. So now is a good time to buy, I think. All right, Evangard, Robinhood closes one leg on an Iron Condor, fucks me up if I wait till expiration. Yeah, so if you're on Robinhood and you're using Iron Condors, I always recommend closing them early. My air just kicked on. Let me turn that off. All right, there we go. Hey, for those that are just tuning in, this is a charity stream. So if you would be so kind, at least check out the pinned comment for the fundraiser. This is my Kenyan friend who taught me Swahili. I stayed with him during a study abroad in Kenya. His wife needs a C-section, and since he's an impoverished Kenyan villager, he's not exactly rolling in it. So I made a contribution. If you would, at least check it out. If it's not for you and you don't want to make a contribution, that's fine. Just by being here, you're helping the stream out, because any money I make off of the stream is just going to go right back into the cause. But if you do make a contribution to it and you want to ask a question, you are now priority for any Q&A you want to do. Let's just look real quick and see if somebody did. Somebody added some money to it. All right, hey, we have made $70. So thank you to those who contributed. Wall Street Meat, thank you for that. Anonymous, thank you. Thank you guys for your contributions to that. I really do appreciate it. And I know Valentine does too. I mean, I've got my... You know, they've had a miscarriage before, so this is kind of their chance to have a baby. It's tough out there. Thank you guys for those that contributed. Okay. What else? Oh, Midubi. Hey, Isaac. What's going on? Jambo Sana, Victor. Jambo. All right, let's... I want to show you guys what I've been doing for my Strangles on Triple Q, which has been awesome. I've had some good success with that, even though I just barely started it. I just studied how to do it, started with EWZ, and kind of worked my way. So let me go ahead. I'm going to log into my account. Privacy, please, for 1 minute. I'll just put up my thing while I log into Merrill. And then I will show you guys the method I use to trade Strangles. And then if you want to, we could look at the whole portfolio after. All right, I'm gonna drag myself to the other side of the screen for this part. Okay, cool. All right, Henry M says, how far out are you buying the calls for SPY and Triple Q after 50? So I'm buying shares, actually, Henry. I'm not buying calls for this here. All right, so let's take a look. This is the strategy that I've been using for my Strangles. So let's look at what I currently have open for Triple Q. All right, can you let me know in the comments if I got to zoom in for a little bit for you guys? In fact, we can probably just do that. Maybe that'll make it a little bit easier to see what's going on here. Okay, that should be close enough, but let me know if there's an issue. All right, so triple Q. Now, when I sold this triple Q Strangle, all right, I wanted the 30 deltas. So that way I'm selling an out-of-the-money call and an out-of-the-money put. At the time I sold it, we were 45 days from expiration. So we were looking at, I think it was the first week of September when I sold. So I sold the 30 deltas, and that meant selling the calls at 386 and selling the puts at 364. All right, I sold each of these Strangles for about $870, and I did 3 of them. So we're looking at what, 2,500 and change in premium collected up front. All right, even though the stock had initially risen and it was getting pretty darn close to my 386 short call, I maintained the position because that strike wasn't pierced yet. When it was starting to tick up, I think it capped out at like 382 or something like that. As long as it stayed below my short call, then I wasn't really at any risk of losing money on triple Q calls, short calls, because all of the value is still extrinsic. And now that the stock has come back down a little bit, we're in like, what is it now, 370 something? Or what is it? Yeah, 373. Even though it's starting to tick down toward my short put, I'm still maintaining the position because my short strike is not pierced. So I have not even needed to roll anything. I'm just letting my call lose value as the stock ticks down toward my short strike, my short put, and as the stock ticks up toward my short call, my put loses value. And as long as the stock is just wallowing around in between these two strikes, I'm making money every single day to theta decay. And if volatility decreases, then I will also benefit from that vol decrease because these calls and puts will both lose money. So right now, I'm up about 59% on the call because the stock has come down a little bit and it's starting to tick toward my short put. Actually, it's pretty darn close to being right in between, isn't it? It's really not. It's only a little bit closer to my short put. But the momentum to the downside has really helped my short call. I've now made 59% on it. And even though the stock has come down, it's coming back down, there's momentum to the downside, enough time has passed that my put is still bringing me money. So I am up now about $770 almost out of my original, what did I sell this for, about $2,500. So my goal here is to wait until I'm at 50% gain, which is going to be what, like $1,300, $1,250, something like that. And then I'm going to close this whole strangle, roll the premium into shares of my around the world strategy, and I'll show that in a second. And then I'm just going to go right back into it, and I'm going to sell a new 30 delta short strangle expiring 45 days from when I close it. And I am now 10 for 10 on doing this. One time, I needed to roll up my short put. Just one time. I only needed to go 10% of the time. I needed to use the first line of defense to make profit. But still, even after that one simple move where the stock had gotten too high, I rolled up my short put. That was enough to bring me all the money I needed to get back within my my break-evens and still walked away with money. If it had gone even higher than that, I would have rolled up into a strangle, or a straddle rather, and been just fine. So this unlimited risk thing, I just don't buy it anymore, because even though the market has been up and down lately, it's been all over the board. It's hit new highs and now it's starting to break back toward the 50 DMA. I have still not seen a realistic example where triple Q gets so completely blown out that I don't have time to defend against it. In the meantime, I don't know how many thousands I've made. I stopped counting. But I'm 10 for 10 on this type of strategy. So it's got to be, I don't know, 8,000 maybe? 6, something like that. Florida man says never seen such large numbers on a screen. All right, how Garridos says, how old am I? I'm 30. How did I make my money? So a lot of investing, but mostly joining the army allowed me to save a lot of money. It's probably the best financial decision ever is to join the military because your expenses go down to phone, car, and internet. That's it. Your healthcare is taken care of. Your tax rate is like 7%. Your food is taken care of. You have no expenses. Everything is already paid for. So having, you don't get paid a ton in the military, but your expenses are so low that as long as you budget correctly and you just dump money into the market, you will be just fine. So let me see. But anyway, what I was talking about with my around the world strategy. So when I make money off of these triple Q positions, I'm rolling it into indices outside the United States. So first I started with EWZ. I was selling Strangles on EWZ until I made enough money off of EWZ Strangles and Triple Q Strangles to buy 100 shares. So right now I'm up about $700 on the Triple Q one. That would buy about 20-something shares of EWZ if I were still doing that. Once I capped out on 100 shares of EWZ, I moved it over to FXI, which is China, because I want to invest in the Communist Party. It's just been their 100th anniversary of the founding of the Communist Party. I think that's bullish. So I bought China. Now, I'm obviously not doing, these stocks aren't doing so hot right now. I'm down 15% on Brazil. Somebody said the market crashed. I really haven't been paying attention to the Brazil economy after I hit this 100 shares. And then China's also not doing so hot. I'm down a little under 3%. But all of this money that I invested into it is profit from Strangles. Sometimes Strangles on the same company. So FXI is the large cap index for China. I sold a Strangle on that right now. We're outside my strikes. And if you see, I'm down $60 on this because the stock has come down so low that it's below my short put. If we get a little bit closer to this October expiration date and it's still down, then I will sell, or I will buy back this $43 short call, take my gain, roll it into shares, and then I will roll it down to a new strike to collect additional premium and save my position. Right now, even though it's below my short put, I've still made enough premium that I would be within my break-evens if expiration were tomorrow. So I'm really not too worried about it. Easy E, thank you for the super chat. He says, hey Mike, I came a little bit late, I think. Are these options you're selling covered with shares or just cash collateral? Or is Merrill just chill like that? So I do have enough cash right now to cover the assignment on FXI, but I wouldn't want to. What do I have in cash right now? I don't even know what my cash value is. Oops. I think I've got like $12,000 left in cash. So I could cover it with cash, but I'm not thinking of it like that. Merrill is allowing me to borrow a tremendous amount of money. I think down the bottom it actually tells me my cash. $16,000 in cash. So I do have enough to take assignment, but Merrill will not force you to have cash if you're doing these short Strangles. They will let you hold naked puts if you have enough money in your account. I think they want at least $25,000. If you have 25 G's in your account, you can sell naked positions. And especially if you're pairing it into a short Strangle, it'll let you do that pretty easily. That's one of the things I do like about Merrill. Even though they have kind of an outdated interface, they'll give me like $400,000 of buying power on margin if I want to use it. I only dig into like 25, 30,000 at a time. I'm still getting used to the idea of selling nakeds. But anyway, once, if I lose money on FXI, that's fine. I mean, I've got the Triple Q is the big one, and that's the one I'm really confident with. So I'll take that $60 loss if I have to. But right now, we're still within break even if expiration happened today. And I think by October, we'll recover a little bit to back between my 41 and 43. My goal is to take profits at 50%, roll it right back into shares. But anyway, I finished out with EWZ and FXI using my around the world strategy. I got 100 shares of both of those. This is the Brazil's ETF, so like their S&P 500 and the China large cap. Right now, the one I'm working on is India. Right now, I only have 3 shares of it because I only had 3 shares worth of premium to collect. But once I close out this Triple Q, that'll give me another, whatever amount. I've got some premiums to collect soon. I made about $1,900 on LRCX's put credit spread after like a month of having to wait on it. It finally printed for me. I got about $1,900. And I've got the short put here, pending payout, $3,300. Some of this is rolled, so the actual profit right now is only about like 1,000, I think. Might be even less than that. But we're looking good on LRCX. If this thing does expire worthless and I'm able to seize the whole $4,500, well, about 2,000 some odd is rolled. So the additional $2,000 profit, I will just throw right back into India and take some gains off of it. Or Halkin, thank you so much. Oh, Jesus Christ, both of you guys. Or Halkin, thank you. Steve Damon, thank you guys tremendously for those big super chats. Appreciate it. Or Halkin says, love your content. Want to thank you for your service in the military. Praying all goes well for your friend and their upcoming C-section. You rock. Thanks so much, Or Halkin. I really appreciate that. And Steve Damon says, tried donating twice, but the link is no worky. Please put this to that. Thanks for all your content. Being a Centurion is the only way I can show my appreciation for changing my life. I share your videos with anyone who will listen. Steve Damon, really, really appreciate it. I don't know which Centurion you are because I don't have that your actual name, but also thank you for being a Centurion and hanging out. There's still a handful of those Centurion slots left, by the way, guys. You know, what you guys do for me on Patreon, I appreciate tremendously, tremendously. Because it really, you say I'm changing your life, well, I think you guys are making a bigger impact on me, I hope, than I am on you. But I really do appreciate everything that you guys do for me. I have some good news that I'm going to share with you guys pretty soon. Not ready to yet. We're going to place the pinned comment here. Somebody said that they tried to donate to the C-section cause, but the link didn't work. Hey, we have raised some extra money, though. Thank you guys for adding to it. We're up to $430 now. Thanks so much, whoever just added to it. Undivine, thank you so much, man. I can always count on Undivine Knight. He always shows the way. And Anonymous, thank you guys. Thank you both. Mike contributed 10. Thank you so much, Mike. Taught me a lot about options trading with your videos. So glad that you guys feel like I'm having a big impact on you. And Undivine Knight, thank you very much for your always generous contributions. I assume at this point you're like, you must be rolling in money, because every time I say, hey, let's team up, you always have my back every single time. So I really appreciate you. And Quizzle says, do I have a stop loss for your Strangles? What happens if the NASDAQ moves 10% in a day, like during the crash last year? If NASDAQ goes down 10% in a day, then I'm going to buy as much as I can, because we've seen the resilience of the market. But as far as my Strangles go, in that case, I'd be blown the fuck out to the put side. No question about it. So what I would probably do is close out my calls, my short calls, for pretty darn close to the max gain, use that premium to buy shares, and then I would roll down into a strangle, or a straddle, I keep saying that. I would roll it down into the straddle, and I would sell the 364 short put. If it moves 10% in a day, that would imply that triple Q is at like 340. So it's not completely absurd that it would recover to 364. I mean, if it goes 10% in a day, that's going to be absolutely devastating to me. But I would bank on it recovering. So if I really need more time, I need more time to let the stock market recover, I would buy back these puts for a loss, and then I would sell puts expiring more distant into the future. That would allow me to collect premium, and it would give me plenty of time for the stock to recover before I get assigned. The 15th of October, if it drops 10% tomorrow, by October, I'm not going to get assigned early on something that expires on October 15th. But if it were to drop 10% on October 12th, I could get assigned early. And I really want to avoid that because I don't have the cash for about $100,000 worth of triple Q. I have to avoid assignment. So I'll buy back these puts, take the loss, sell puts that are expiring in the more distant future, collect the additional premium, and avoid assignment that way. If it still keeps going down, well, I mean, at some point you just got to start rolling down those strikes, or you're going to have to take a loss. I mean, there's going to be no way around it. If the stock goes down 25% in a month, you're going to lose money. I mean, the whole world is going to be freaking out. You're going to have like pension funds that are, pension fund managers resigning, taking their golden parachutes and moving to Barbados. That's how you know things are getting real bad. All right, Steve said the link works, but something between my PayPal and the link. Methinks. Yeah, so if you guys are having trouble with that, then I just keep in mind that anything that I make off of this stream, I'm just going to put right over into my friend's GoFundMe, or fundraiser, rather. So if you want to contribute to that, but you can't, then just, let me know, and you can either super chat me or just send money straight to me, and I'll just send it on to him. But thank you guys so much for those that have already added to it. I mean, you guys are phenomenal people. I mean, this is a Kenyan villager that you guys have never met in your entire life, but some of you are still putting up big money for him, so really appreciate that. Garrido says, do I have a money goal with my portfolio? I'm trying to get to the point where I can make $5,000 a month off of just trading and off of dividend, and I've hit that several times in a row now because I already have about $1,000 a month in dividend, and then trading, especially with the Strangles now, has been very successful. But I want to be able to give myself a nice thick cushion so that I can retire early and just do YouTube. That would be my real goal. IZC1234, he says, what do I think about the recent merger of Spirit and Gree? All right, you guys want to talk about Spirit and Gree? Or Spirit, Support and Gree. All right, let's go over. Let's check out. Oh, no, it's not going to be there anymore, is it? It's Gree now. All right, here's what I think. Is what I think about the merger between Support and Agree. Okay. You have two companies with basically nothing to do with each other. You have a power plant company that wants to mine Bitcoin, and you have a technical support group. The idea here is that both these companies are coming together. You're going to have a technical support group for a Bitcoin miner. Tell me how many people have ever been trying to mine Bitcoin and were like, you know what we really need right now is I need a technical support group for my Bitcoin mining. And I'm sure there's people setting up out there that want that, but if you're a Bitcoin miner, like as an industry, you don't want clients calling for technical support. So what were they actually trying to achieve? I don't know what they wanted out of this merger. They wanted to mine Bitcoin with a power plant. I got that. But what's the goal of bringing this technical support group into it? First red flag, these things don't really make sense. The whole idea was to get GREE listed on a major exchange with support group. What were they trading on? The NASDAQ? I don't think they were on the New York Stock Exchange. Were they on the S&P 500? I don't know what they were at, what indices they were in. I don't know what exchanges they were on. But the goal was to get this Bitcoin mining group, power plant thing, into a major exchange. So hold that thought. We'll come back to it. Easy E super chatted. He says, thanks for clarifying. Found your video senior year of college and still get shocked when I hear people have portfolios worth more than 2K on Robinhood. Upgrade as soon as you can. That's all I'm saying. Robinhood is still the best brokerage to use when you're learning. Absolutely. Because they make it so easy to start losing money as soon as possible. But at some point, you're going to want to do things that are a little bit more sophisticated. And Robinhood's not going to help you do that. They're actually going to harm you by closing your positions early or doing all kinds of funky other things. Upgrade to Tastyworks is probably the best one, but it's also the most complicated. You can use any plethora of them. Just upgrade when you can, when you're ready for something better than just a good interface. Okay. Anyway, let's come back to GREE/support group. So the whole point of this thing, because these companies had nothing to do with each other, was to get Greenridge Generation Holdings, a power plant that mines Bitcoin, onto a major exchange. So they merged with Support, who was looking for somebody to do that with. And in exchange, the holders, the shareholders of Support Group, got about 1/10 of a share, or like 1/9 of a share of Greenridge. The reason we had this huge bump is because of that Wall Street bets type craze that's overcoming people who are just getting started investing. They think they know what they're talking about, but you guys can't see. My bad, guys. I didn't bring you the... I didn't change on OBS my thingy-majiggy. This is what I've been looking at for the last 3 minutes. My bad. My fault. All right. So this huge bump right here, you can see the stock went to like, on a pre-split basis, went to like $500, or pre-merger basis, something like $500. That made like no sense for a stock to go this high. The reason it did is because a lot of people that have just gotten started trading, they're experiencing the Dunning-Kruger effect, where they read a little bit about something and suddenly think they're experts. So you had a lot of people saying, hey, there's a high short interest on Support Group because the stock is bullshit. High short interest. When they merge, all of the short holders, all of the short sellers are going to have to cover before the merger. All over, not Wall Street Bets because it couldn't be discussed there, but on like penny stock forums, Yahoo, wherever, in Discord I'm seeing people talk about it. They're under the impression that short sellers must cover before the merger. And therefore we're going to have this huge short squeeze. And people started buying en masse in order to achieve it, which probably in some ways did help a short squeeze. Short sellers did have to cover to some extent. You had this gamma squeeze, really, punching the stock to $500. But once the merger was already a done deal, people started realizing there is no further short squeeze. This is it. This move that we did to bring the stock to $500 on a post-merger basis, pre-merger basis, is the short squeeze. The short sellers don't have to buy their shares before the merger. That doesn't make any sense. And if that were the case, people would have been covering as soon as it was even announced that they were going to have a vote on a merger. They wouldn't be waiting up until the last day like people were expecting. I'm seeing people that haven't traded stocks for more than 6 months talking about how this is the best opportunity they will have in their life for making money here. Because all of the short sellers, 98% short float, whatever, would have to cover. And that's just not the case. It doesn't work like that. The short shares will convert just like the long shares will. So now you've got the stock absolutely crashing down to below its 200 DMA, which is actually still pretty crazy that it even did that. On massive selling pressure with really, I don't see any reason for there to be support, except the RSI kind of flattened out. That's about it. This was people deceiving themselves into thinking that this was a short squeeze opportunity when really the short squeeze had already happened. The merger didn't do anything for the company. All it did was get Green Ridge listed instead of Support Group. Or now they're one company. So if you were to be like screwed right now, I'd really think about just taking, cutting losses or maybe selling an at-the-money covered call, get some additional premium on it. But this is more like a pump and dump. Here, Quidzle just said it. This is a pump and dump and not really a short squeeze. This thing right here, it probably did squeeze a little bit, but this was just retail traders telling each other that they were going to get rich, so they all bought shares, and then it crashed. Because people realized that the whole narrative about short sellers must cover was bogus. It had always been bogus. So short sellers got to hold their positions, and look at that, all of them made money. To the people that shorted as of, July, when the thing started really pumping, June-ish, early June, they're all just fine. Anyway, so lol said, I paid a massive premium for support puts and they still printed. Honestly, that's probably the best way to do it. Rather than short the stock, buy puts. So congrats. And Boomer Bob says he just threw all his money at ADA. Are you talking about Cardano or are you talking about whatever ADA is? You must be talking about Cardano. I actually put a couple thousand into Cardano as well because Ethereum is very hard to use. It's very expensive right now. I don't like it. So even though I'm bullish on Ethereum overall, I still have a good amount of money in Ethereum. I think it's time to start picking up that Cardano. All right. Bull Trap. IZC1234 says down 40% on Tuesday, down pre-market Wednesday, 50%. Market opens additional 20%. Yeah, it's going to be pretty ugly. I don't think there's really much left for Gree. I mean, we went from Spartans to Greetards real quick. And I know somebody, he made a substantial amount of money on support when it, like in this squeeze. He didn't want to sell. He was convinced that it would continue rising. And, it's unfortunate to see. I mean, I think he did sell some, so he's not screwed. But when if you get a stock that goes from 50 to 400 in like less than a month, take some gains and put 50% of it into an index ETF, and you will win every single time. And IZC also said that there are people that couldn't trade when it changed over to Gree. Now, I don't know what the deal is with that because you should be able to trade it pretty much immediately. So I don't know. Is it really true that they were unable to trade? I mean, if that's the case, then that's a problem with their broker, not necessarily with the merger. I wonder what broker they were on that didn't allow them to, because that's shitty. What else we got here? Bull Trap, TRSs. Ice asked a question. Is there a method behind rolling leaps? So I'm not sure what you mean about rolling leaps. Let's see. Is my Merrill still up? Yeah, let me get that. Let me get Merrill back up over here. So if what you mean by rolling leaps, like right here, I've got this long LRCX call at 500. All right, it doesn't expire until 2023, so I got a lot of time here. But I'm up over 7,000, up 88%. My delta on this, I don't even know if it's going to tell me. Merrill Edge really isn't good about giving you Greeks. It's being very slow right now, too, for some reason. Even though my connection seems to be fine. Yeah, this isn't even going to tell me my delta. I'd have to actually look on Robinhood to see what my delta is. But I'm going to assume it's like, I don't know. It's pretty deep in the money. Maybe it's 85, 90. So right now, this position is worth about 85 shares. The equivalent delta of about 85 shares. But what if I think that LRCX is going to go even higher? What if I think it's going to go not only to 600, but what if about 700? So maybe I'll roll up this call to the, let's do this on, let's go over to, I'll set this back up. Let's go through a hypothetical and look at LRCX. All right, so here's what I have. All right, let's trade options. Let's go all the way out to my, wow, they do 2024 now. All right, so I've got the 500 call. I own right now the 500 call. We can see what the delta is. The delta is 75, so I was a little off. But the delta on this is 75. This is what I own. All right, so let's go ahead. We'll sell. What if I want to sell that? Because I think the stock is going to go way higher. So let's sell that. I'm going to take my gain of about 7,000. Remember, it's worth about 16,000, but I bought it for like 8,000, something like that. All right, and now let's buy, for the same expiration, let's buy the 700s for 6,000 each. So by doing that, I would still have about $9,000 of cash left over. All right, so let's adjust our ratios here. So I could buy, can I buy 2 of them? I'd still have 25 left. So let's say I sell my one $500 call for about $16,000 cash, and I use that to buy 2 $700 calls. All right, if the stock goes up to $800, because I'm super bullish and I think it's going to fly higher, my delta on these $700 calls will be about maybe 75 each. So now between the two of them, I now have a 150 delta. Whereas if I had just held this call, this $500 call, my delta would be like 95. So I've gotten pretty darn close to double the delta. Still have $2,500 cash left over by rolling up my leaps. Now, I'm not going to do that because I don't think LRCX is going to go up to 800 by 2023. But I think it might go to 7, and I'm pretty happy to hold my 500 call if it does do that. I wouldn't buy these $700 calls, but if I were so bullish, this would be a method that you could use. You're essentially trading in your delta for more gamma. Right? The gamma on this probably isn't very high right now. It almost doesn't even matter if the stock goes higher. Volatility is more important. Gamma is like nothing. So no matter how high LRCX goes, I'm really not going to get that much more delta out of this until we get closer to expiration. So I could trade in some of this delta with 0.001 gamma. And I'll go up here. It's still going to be pretty low gamma. 0.0016, 0.0012. So I can get a little extra gamma. And if the stock starts really flying, then this gamma will increase. And I'll be able to get a higher delta out of these 2 calls than I will out of this call. I hope that answers the question. It's a complicated thing there. Hello, so people were saying that their spirit contracts or support contracts became unsellable. The merger was like 1/7, so the contracts were worth less than 100 shares. Yeah, that's another thing too. If you have those reverse mergers where the number of shares is disproportionate, nobody is going to be buying contracts that are worth 11 shares. Like, why would you even buy calls for 11 shares? Why wouldn't you just buy 11 shares if that's what you wanted? So you start running into liquidity issues that nobody actually wants to buy your calls. The intrinsic value is not going to change. That's still going to be there. But as far as extrinsic value goes, or just bid ask, it's going to be funky. So it's really not a good choice. I wonder if Robinhood even has those. Yeah, it's not even going to let you trade options on Robinhood. Because they're protecting you. Really, they're probably protecting themselves mostly. But Boomer Bob says that's retail cannibalizing each other. Yes, absolutely. Brady, on Robinhood, it could be traded. All right, Puma Block says, when would you say it's healthy to retire your 9 to 5 and focus on stocks solely? How much capital is realistic in your opinion? I think more important than the amount of money that you have is your cash flow. So I'm a cash flow oriented person. Give me a second. I'm going to set up my Merrill Edge and we'll look at dividend. I'll show you guys why this is important to me. Now, I'm not really huge. I mean, there was a point where I thought dividends were the greatest thing in the world. And there was a time when I thought dividends were absolutely ridiculous because you can make more money off of putting that buying power toward theta gang strategies versus toward dividends. Let me pull up Merrill Edge. Now I'm at the point where I think there is some value in dividends because there is value in just having money that you know is going to be there for you pretty much regardless of what you do. So for me, I put some money into my dividend portfolio, and now here's what Merrill Edge thinks I'm going to get from it each month. So September, I mean, this month is on the lighter end between my different accounts. We're looking at, this is a preferred shares index, or preferred shares ETF, give me 22, Prudential 122. You know, every week or so, I'm getting some money. And then here's a bigger one, Triple Q, toward the end. Where's QYLD? QYLD isn't on here this month. They're supposed to pay. They must be paying twice in October or something like that. QQQX, like all these stocks are just dividend. It's not even listing QYLD for some reason. Hold on 1 second, guys. All right, so I don't know why it's not listing QYLD right now for some reason. Oh, there it is, QYLD, $317. So you can send her down. So QYLD is a covered call ETF. They just sell covered calls each month, and then they give you the premium as a dividend. So by having this cash flow of $800, $1,200, things like that, that is a really solid foundation to make sure that you have some money coming in, even if the market tanks, even if you don't have a 9 to 5. So I'd like to get this to the point where between dividend and trading, I'm collecting $5,000 a month. That would be plenty, so I could just go full-time YouTube, put all my effort into that, and I'm getting there. I've hit 5,000 several times in a row now. I don't know if it's still quite as reliable as I'd like it to be, and I still have a lot more time I need to put into YouTube before it really starts exploding to the point that I'd say I'm a full-time YouTuber. But we're getting there. I'm going to try to get there by the end of this year, and I think I'll be able to do it. But here, you can come here. Come here, baby. Whoops. All right, the baby cost me my light, but little Becky's going to join us for a couple minutes. I think my stream is pretty much done. You want to play with this? You can play with the money gun? Yeah. All right. More? Okay, here. You play with it. Yeah. Play with the money gun. There you go. All right. Carfi Wong says, "Hey Mike, my portfolio has 10,000 in cash laying around unused, and I'm wondering if you know any good PMCC candidates to throw it all into." So, Carfi Wong, I think right now is actually a good opportunity to get into a SPY PMCC. I mean, 10K is a lot, so I'd try to spread that around. But I think Snap is a really good one. Let me go over. Yeah, this stream's not going to last much longer because she's not going to cooperate with me. But I'm thinking Snap is a really good choice for you. I'm using PMCCs on Snap, and the premium is quite high, so it's worth it. Let's see what you can get. We're not going to use all 10,000 here because that's too much. But let's. She cost me my light, and now my stream is all messed up. Hold on. Okay. All right. Here, just hit this button. Look, money gun. See? Try again. All right. So here we go. Let's look at the Snap calls expiring 2023. This is where I have mine. So a lot of time on them. I bought the 60s. Those are at about 75, which is perfect. So let's buy a $60 one. That'll cost you $2,500. Jesus. Child, here. Keep your pull-out game strong, guys. All right, and then, baby, and then let's sell 30 days at a time. Let's sell the calls. Let's sell the $30 call. So each month, I think it's fair to anticipate getting about $184 off of the short call. And then if the stock does rise to $80 from right now, it's at 74 and change, 75, something like that. Then you will have made about $400 on your leaps, and you'll still have made about the 184 on your short call. You've got a very high break even, a lot of time to mess around, so I think that would be a really, really good choice for you. Set up one of these on Snap, definitely. What else do I have PMCC on? That's within your budget. What else have I done it on before? The airlines, I have mixed feelings about. This might be something worth looking at. My PMCC on American Airlines, not going that great, honestly. But now that the stock has come down a little bit, it might be an opportunity. So, I mean, take it with a grain of salt. Airlines are going to keep doing airline things. But let's go January 2023, same deal. Let's buy like a 75, so 86 is high. Let's buy the 15, yeah, for $600 is all it takes. Buy the 15 and start selling the monthly, child. And start selling the 1 month. Let's see, 30 delta, what will that give us? All right, so maybe another 44. I think, you use that 10,000 right. I think it's fair to expect, $300 a month in pretty consistent returns. And you'll still have your 10,000 left. It's not as though you have to spend it. You're just investing it. So that's the method I would go with. Snap is a good one, definitely. American Airlines is a maybe. You know, see what you think about the airline industry right now. And if you can afford it, you know, there's always SPY. I mean, it's going to be a little bit more expensive, though. Now that the stock is down, I think it might be a good opportunity. Let's buy the Junes. Buy the June 30. Let's see how much these things cost. It's going to be pretty expensive, though. Or let's buy the 70 Delta. It's really not that bad. 3,000. 35. Why are these deltas so low? Yeah, deltas on these are really, really low right now. It's weird. You'd think they would be a little higher than that. But anyway, you got to go all the way down. Child, you got to go all the way down to the, like, 380 before you can start getting a 75 delta. But if you are so bullish on this, you could buy... She's playing with flossers. You can buy the 70 delta expiring in 2022 and start selling the monthlies. And go see Mama? Okay, go see Mama. Go get Mama. After you made a mess down here. Go get Mama. She's going to step on my light again. Oh, no, she went over it. All right. And that is my beautiful daughter, Becky, for you. I'm glad she got to hang out with you guys. Oh, yeah. All right. So anyway, if you buy the June 2022 380 call, it'll give you about a 78 delta. Cost you $7,500. So there's kind of a lot out of your $10,000 budget there. But it's, you know, SPY, and it's not expiring until June. So you're buying yourself a decent amount of time. And then what if we sell, let's sell the 30s, sell the 30 delta calls. 35, 450, yeah. So now you'd be getting about $280 a month off of that. And if SPY does rise that much, you're going to get a pretty decent amount of money off of that call anyway. According to Robinhood, SPY would have to go up to 537 before you actually lose money to the top side. And anything above 439, you'll have profited off of the whole position. Regardless, you know, within 1 month, you're going to be getting some cash each month off of the short call. So this is actually a good method. You could do one of these and one of the snap ones. That would be within your budget. But remember, you are putting a lot into SPY. SPY is a pretty diversified ETF anyway, so it's not like you're going all in on one position. But those are good methods I would use there. And he says, what are the chances of an in-the-money call being exercised? So if your delta is above like 95, that's when you start having to worry about exercise. Anything below that, I really wouldn't worry about it. The extrinsic value is too much for somebody to throw away. What else we got? Kids will be kids. Mikey. Yeah. Thanks, Car Fi Wong. Appreciate you. What else we got? Keep your plot game strong, guys. I definitely support that. Rusty Russ is there. He says, it's your boy Rusty Russ. What do you guys think about Mobile Suit Gundam NFTs on Gundameli's channel? Hey, if you guys know who Gundameli is, this is somebody that Rusty and me have been interested in making NFTs with. I'm still trying to figure out NFTs personally, but she's got a big fan club, so we think it might be an opportunity there. Quidsley asking, well, how much months of Strangle profits do you stand to lose for a 10% downside flash crash? Just trying to run the risk reward in my mind. So let's think. If the stock market were to drop 10%, Triple Q would have lost about 30. So it'd be $30 out of the money, $3,000. So it would be $3,000 loss per Strangle if the market were to drop 10%. So I have 3 of them right now. That would be about a $9,000 loss. So far, I've probably made about $8,000 off of it. So if the market were to drop 10%, it would be a $9,000 loss there. But my calls will have expired worthless. So that would recover me about $2,000, maybe a little less, so $1,500. Yeah, a 10% would pretty much set me back 10 Strangles, so about 6 months. I don't think we're going to get a market drop like that every 6 months. And if it does happen, it's really not that bad. All you got to do is roll your positions a little bit, use your defensive moves, and I think I would still be able to come out on top of that by December, by rolling. So I'd be able to keep that $6,000 gain intact. If the market starts dropping 20%, now we're really running into some trouble. But I don't think that's very likely to happen at all, ever. Even in the COVID crash, what was the maximum loss? It was like 25, and it recovered within like 2 months. I don't think it took that long. I mean, by like what? July, we had fully recovered from like the worst crash in our lifetimes. Yeah. How is Becky's portfolio? So Becky's portfolio, funny you guys mention that. She actually does have a portfolio. And it is all in a 529 plan. So those of you that have kids, everybody's immediate idea to put to save for college is to go and put your money in a savings account for the kids, or buy some bonds maybe at the most. That is the wrong way to do it. What you need is a 529. Is a 529 college savings plan. So a tax advantaged account. This is the SEC, so it's got a lot of information that we're not going to care about here. Basically, what this is, instead of putting your money into a just some savings account to save where it's going to earn no interest, you can invest the money into the stock market, but you also get a tax write-off for whatever money you contribute, up to like $5,000 per parent, something like that. So between my wife and I, we can put $10,000 a year into Becky's investment account, which over the next 18 years will grow tremendously, and we also get a $10,000 write-off for doing it. We just have to make sure we use different names. Like I can't put 10,000 and she put 0, because we would only get the write-off for 5,000. But if I put 5,000, she puts 5,000 into the same 529 college savings plan, we have just saved ourselves a few thousand in taxes by writing all that off, and the baby gets $10,000 invested into the S&P, which 18 years from now should be 30,000, something like that, maybe even more. The way things have been going, that would be a lot of money, but I don't think we're going to see these 20% years forever. That is the correct way to save for your kid's college. If it's up to me, she's going to join the Coast Guard, but I don't know if we can count on that. Henry M says, if I just buy calls, what are some defensive strategies if I'm down on them? There's really not a lot that you can do. If you buy calls and the stock drops, there's not that much you can do. Your options would be, like, let's say you bought the October 15th 422, and the stock, it goes down. Now you're like down here. Now the stock is at 438. You stand to lose all your money. What you can do is you can sell a call against it and turn it into a vertical spread, and you'll recover some of the money. So maybe instead of losing all 700, maybe you lose 400. The risk is if the stock does recover, now you're on the hook. Now you have this you have this short call that's going to hurt you if the stock does recover. But I do that plenty of times. If I buy a call and the stock starts dropping, I will sell and turn it into either a vertical spread or a PMCC. IZC says, am I holding Palantir shares or options? I was PMCCing Palantir. The stock went up too high. I think it was actually during this, that crazy boom where the stock went up way, way, way too high. Let me see. It was earlier in the year. I think I was PMCCing here, last October. And then the stock went up to I think it squeezed at one point to $50. It's just not even showing here. And that boxed me out. That hurt me pretty bad. So I was able to come out with a profit still, but I had to close the whole position. My total gain was the price of about the baby's screaming, is the price of about 1 Palantir leaps. So out of the 5 I was PMCCing, I sold 4, took the gain, which equated to about 1 Palantir. So I'm holding 1 leaps on Palantir expiring in 2023. I think the strike is $10, so I'm in pretty good shape. I don't think it's going to lose value at this point. It's going to be worth something in 2023. The baby is not very happy right now, but I'm going to have to go upstairs pretty soon. But, last thing here. Matt O says, thoughts on Baba Leaps? I wouldn't trust this because I think Jack Ma is about to get gulagged. This thing is just tanked. There's no reason why I would not buy this right now. Maybe in the very long-term investment you could do it, but I wouldn't be counting on a falling knife. It could bounce at any point because it's been so thoroughly destroyed. But I just don't see any reason here to really be bullish on it. The RSI is picking up just a little bit. Maybe it's bottomed, maybe it hasn't, but I want to see some momentum before I get on board with this thing. China's cracked down pretty hard on all the big companies, honestly, and you've got this vague but noticeable head and shoulders. Yeah, not something I will do now. And yeah, QYLD, I would definitely look at QYLD. That's a dividend ETF. You can get consistent money every month off of it. They just pay you. And then here, last question here, because I got to go help with this baby. Sam Elma says, market crash is inevitable. This is a tool of the new financial system, i.e. algorithms, drone, blockchain, hashtags, algorithm technology. Yeah, maybe. If it does crash, I'm going to just buy more because I think it's a good opportunity when the market crashes. So hey, thank you guys so much for these contributions. We're up to $530 for them, so that's going to make a difference. All of you that helped out. Anonymous just said, added, Meme Man contributed. Thank you guys so much for all these contributions. You guys are the best. Every time I do one of these, you guys have stepped up and helped out. Not that I do it very often, but I mean, a charity like this, a Kenyan that you guys have never met before, you're helping out, with his little family. This will make a difference for him, absolutely. And whatever, all the money that you guys contributed via Super Chat, whatever I make off of this between ads, Super Chats, everything is going right back into this. So we have now, as stated again, we have successfully raised something at least like $700, I think, maybe $650. So all of you, thank you for what you guys are doing. I got to get going here because the baby is going to freak out. But thank you guys so much for this. I'm going to be making some content in the next 7 days or so. We've got a Dank Trades video coming out. That's already been recorded. I've got a video on rolling that's already recorded. I just need to make all the memes for these. And then we're going to do the freeloader challenge next. And I think you guys are going to really like what I've got for the freeloader challenge this round. So anyway, that's all. Thank you guys so much for all this. Really appreciate it. I'll catch you next time.